What's going on, people? Welcome back to my YouTube channel. Thank you very much for tuning in with me again. Just before we start this video, I'd just like to say thank you to all of these 135 subscribers and all of the views I'm getting recently. I really appreciate your support. If you do like the videos, drop a like, share, and even leave a comment. If there's anything you'd like me to improve on, if there's anything you'd like me to make a video on, that would be absolutely great. And I will, get back to you and try and make a video for you. Okay, so jumping back into the video, ultimately what we're going to look at here is how to look at decisional order blocks and how to really identify them. Okay, so there's two main sort of ways that I identify that these decisional order blocks. One of them being I use a fair value gap, which we will go into a little bit in this video, and the other way is by using premium versus discount markets and then looking for using all of the timeframes available down to the 15-minute time frame. So we're using the 15-minute all the way up to the daily, understanding where we are in price, and then picking off potentially the correct order block, if you like to call it that. One thing that I find is really kind of prominent in the Forex community is everyone's just trying to take risk entries all the time. Realistically, what we're looking for in the market, we're looking to be consistent. We're looking to take consistent profits out of the market, and we're looking to have the probabilities in our favor. Okay, so what is the best way to have the probabilities in our favor? Is it a risk entry or is it a confirmation entry? Well, I mean, by the sounds of it, it sounds like everyone kind of wants, to get these risk entries, to get these perfect entries. Well, actually, you can get a perfect entry on a confirmation entry, and, the probabilities are in your favor, okay? You've got a confirmation entry bouncing off of a POI that you are confident about, and realistically, you're still going to get a very nice trade out of it. You might just have to wait a bit longer, which is patience. This is psychology. This is something that you need to work on, okay? So let's jump into the first example here, right? So what I'm going to do is I'm going to describe how I'm using the premium versus discount, okay? So this is just a Fibonacci. What I'll do is I'll bring my settings up here. So all I'm using is 0, 1, and 0.5, okay? So those are the settings. It's giving me a the 50% line, and then it's giving me a premium market and a discounted market. Okay, so maybe take a screenshot, do whatever you want with this information here. If you want to copy it, that's absolutely fine. I'll just leave it there for you. Okay, so looking at the market here, we're looking at Euro USD right now. If we go back to the video which I just posted about the ranges, okay, we can see right here, this is our previous range in between this low and this high, okay? And then when we've broken out, we haven't had a retest, okay? So at this point, we can see potentially the market is overextending, okay? Now, if we look at this bullish candle here and then this bearish candle here, and then obviously the next candle right here, what we can actually see is there is a swing point, okay? So in between these three candles, this bearish candle right here has a higher high than this candle here, okay? If you look at the high in the top left corner, it's 114,622, and if you look at the high on this one, it's 114,641, okay? So we're about 19 pipettes higher on this candle here, okay? Which then indicates to me that we have a swing point, right? So this is like a lower high to the left and a lower high to the right, giving us this swing point here, okay? So this is where I'm going to be starting my Fibonacci from, purely because of the swing point, right? We have broken out of this range, we haven't retested the range, and now we've continued to the downside, okay? So if we pull this all the way down to here, this is a weekly order block refined down to a 4-hour order block. If you look all the way to the left in your charts, you can figure out, where this order block is, okay? So this was the last place that I was anticipating price to kind of turn around from, right? I expect bullish prices from here, and I expect price to come back up into this range, and then whether we continue or whether we have a reaction, that is kind of down to your discretion, whatever you believe. For me personally, I think that we're going to just continue all the way up, back up to potentially new highs, at least to take out this liquidity here, and we will see kind of where we go then. Okay, So marking this premium versus discount off, right? So we have the swing high and then a swing low. Okay, so this is a higher low to the left and higher low to the right, and then we've broken major structure. Okay, this is a swing point in the daily time frame, right? We've swept this liquidity here, but ultimately I think we're gonna start shifting bullish again. What we've done is we've swept this low here, we've pushed lower, and then we've broken this high here. Okay, so we've changed direction. Here is your daily order block. Okay, and as you can see, we've reacted from it right here. So I'm waiting to see. NFP is today, so waiting to see whether this is gonna, you know, pop down and then rally to the upside. This is my anticipation. You know, we shall see. Okay, but let's get into the decisional order blocks, right? So ultimately what we have here is a range, same again. Okay, so inside of the premium market is where you're looking to take shorts from, and inside of the discounted market is where you're looking to take longs from. Okay, when you're buying something, you want it to be as discounted as possible. You want to make, you know, you want to spend the least amount of money and get the best item possible. So this is exactly the same in the Forex market, what you want to do. And this is why the saying goes about of, okay, you want to sell high and buy low, right? This is how you then define the sell high and buy low, right? You mark it off with a range. You use the Fibonacci to find out the premium and the discount of the market, and then you use, you know, your knowledge of smart money concepts, or, you know, supply and demand, or whatever you want to use to then figure out where you can trade from. Okay, so if we're looking for shorts in here, right, we can see that prices pushed down into this POI and then started rallying back up higher here. Okay, so now we're looking for some sort of pullback, some sort of relief when we get into this premium. Okay, so what you could be doing is you could be marking off this order block right here. Okay, this is an up close candle before the push to the downside, breaking structure here. Okay, as I defined in 2 videos ago, you can watch that if you need any help. Okay, so what we can do here is jump down to the 8 hour. Okay, and we can define where our order block could stop, right? The definition of that one there is, this is how we would kind of refine it. Okay, now the reason that this doesn't work here, and there is a very valid reason. Okay, I'm just going to get rid of this for now. If we jump onto the weekly, what we can actually see here is we have a fair value gap in between this low and this high here. Okay, so a fair value gap is a gap, or an imbalance if you like, where price has only delivered sell side. Okay, so in between here and here, inside of this area here is only sell side, right? Now with that knowledge, what you can then do is, let me just delete these off of here. You can identify that there is also another fair value gap inside of here, right? From this low all the way through here to this high, there is only sell side in here, right? From what you can see on the weekly time frame. Okay, so you can anticipate that potentially price could come up into this area and then potentially have a reaction. Okay, and that's what we're kind of waiting for, right? So now we understand that we have a fair value gap on the weekly time frame, which is a very high probability POI, if you like. Now what we can do is we can start moving down and saying, okay, well, this order block here is actually below the middle, or the 50% of the fair value gap, right? So what we can do is then look a little bit deeper into the market and say, okay, well, actually there is a, let's just go onto the 2 hour because you can't really see it on the 4 hour. Okay, so right here we have an up close candle before this push to the downside, which ultimately breaks structure. Okay, there we go. So up close candle before this push to the downside, breaking this structure here. We get some liquidity left above this high here, and this is how we can identify where liquidity is on previous highs. This is then going to stop you from taking a trade from this area here, okay, making you understand that, okay, there's liquidity resting above this high, which is going to be swept, and then you can look to take shorts from here. Now, this big drop to the downside really wasn't random. As you can see, we tapped straight into the 50% of the fair value gap, and then we also tapped into this 2 hour order block. And now what you can do is you can get onto a lower time frame, look inside of this area here, and then take a short, right? Whatever your entry model is, you can add that into this scenario, okay? So this is one of the best ways that that I use personally on a day-to-day basis, how I'm actually finding, where the decisional order blocks actually are, right? Now, what you can do also is use all of the time frames down to the 15-minute. So you really don't want to be going any lower than the 15-minute time frame, right? Because any lower than that, you then start getting a lot less probable in your scenarios, right? You get a lot less information, and then you kind of get lost in the lower time frames. Okay, so use everything from the daily down to the 15-minute time frame. If you don't see anything there, then there's not really a trade there for you. Okay, you want the probabilities to be in your favor, and if they're not, you want to be staying out of the market, right? You don't have to be catching every single move. You want to just be using the most highest probability areas in which you can. Okay, and using fair value gaps, as I've just demonstrated here. Also using the premium versus discount, you can use this and understand, okay, yes, this could be a POI, but actually the fair value gap is just above this level. What is the information that we have up here? Okay, and then we can just mark this off, see how price reacts in this level, and then we can obviously look to take a short from this area. Now, as we can see, we have a very nice clean target. As we can see here, we've reacted from this level very nicely. We can target these lows, and then there's your trade, right? A very nice trade. Even if you weren't to refine that, let's just say we go down to a 15-minute time frame, and we'll go back into here. Okay, so we've started to react on the 15-minute time frame. Let's just bring the replay tool in, just so it's easier to get back to a lower time frame. Okay, so maybe a 1-minute time frame. Okay, so here what we can see is we tapped into it, then we tapped into it again. Okay, so now what we've done is we've swept liquidity above this high with this high here. Okay, so there's a sweep of liquidity, and then we have some minor breaks of structure to the downside, and then we potentially have, let's just see, maybe a 5-minute order block here, or let's use the lower time frames, utilize all of the time frames, and go down in a systematical way. Okay, so this is the last up close candle before that push to the downside, which gave us a couple of minor breaks of structure. Here is your lower time frame order block. Here is your entry. So let's just go short position from here. Okay, stop loss can be just above this high now, right? So let's just see how we're actually defining this, right? We've now got a 5.6 pip stop loss. If I actually get a bit more specific on that, I'll try and zoom in. Okay, so we can go just above this high here. Okay, 5.3 pip stop loss, and then what we're doing is we're targeting this low all the way down here. Okay, which is right here. So ultimately we're looking at a 22 to 1, right? And that's just using the minute time frames. If you're getting on the seconds time frame, you can get absolutely crazy. But yeah, this is pretty much how I'm looking to to take my trades. I'm looking for an area in which I'm looking to take the trade from. Is it, does it have logic behind it for why it needs to return from that area? Okay, for me, you've got a higher time frame POI, you've got a fair value gap, and then you've got a reaction with a liquidity sweep, and then you're trading from an order block. Perfect. Okay, so I hope this all makes sense for you guys. If you like these videos, drop a like, share to some of your friends, any of that cool good stuff. Drop a comment if you've got anything you want me to cover, like I said just earlier, and I will catch you in the next one. Peace.